Welcome back to Sunset. It's a great conversation with Joe Knapp. I mean, I think it's always interesting to talk to the frontline people, right? I mean, I can't even imagine, David, how many boards Joe has probably sat in front of over the, I mean, heck,
thousands.
I've
been with him.
I've probably known Joe for close to 20 years, in the market, and I just can't even fathom how many times he's had to repeat some of these questions and conversations.
I can only tell you the last 3 years have been very difficult going before, whether it's commercial owners or condominium owners, and telling them that their premiums are going up 50% or more, in some cases 100% in 1 year.
Right. It's absolutely unbelievable.
And think about what that does to the average homeowner or condominium owner who is expecting to pay $800 a month, and all of a sudden they have the double whammy of not only the state legislature saying you now have to reserve and there's no waiver of reserve, so now you're...
And a new reserve, structural reserve, on top of now mandating the original reserve.
And then, so let's say your 800 became 1,100. And then your broker comes in, your insurance broker comes in and says, got bad news, your insurance premium doubled, so now your 1,100 becomes 1,250. And now, in essence, your maintenance payment went up by more than 50% in 1 year.
Right.
And you were planning on only having to pay 800, and now you're at 1,250, or in some cases 1,500.
And I think what's often invisible, and I want to advocate on behalf of all the vendors out there, whether it's an attorney or a management company or a valet parking company, a security company, a landscape company, it's very easy as a resident in a condo to forget that the insurance market affects all of those people too. Right. What you pay for general liability, what you pay for workers' compensation, what they're paying on their property insurance if they own property.
It's because we're not educated, though.
But it's also a difficult conversation to have because you're talking to a firm of one kind or another whose rates have gone up, and they're saying, "Man, you're kicking us while we're down, Josh." And saying, but there's property insurance, there's labor costs, which again, and we didn't even talk about labor. I mean, probably what in the last 5 years, realistically 30% in this market, anyways.
At least.
And so then that 1,250 is probably more like close to 1,500 when you look at that, especially in labor-rich associations.
I have two takeaways from all of this. Just as
only two,
yes.
One is my shirt is gorgeous.
Okay, so there's 3 takeaways.
Thank you.
The first one is that for people who are already in condos, it seems like that, educated or not, that their landscape is changing and there's not a whole lot they can do. So,
that's correct.
So that's the first takeaway.
I'm going to jump in on David's response.
Sure.
I agree, and I agree. However, I think there is something they can do, which is to get educated. Okay. Because I personally believe that what ends up being poison for condominium associations is assumptions. Meaning, if you're not educated and you're making statements like your broker walks in and said your insurance has doubled, and you start getting comments like, they're just killing us on price. They're, they're putting money in their own pocket. This is their doing. It's, industry conspiracy, et cetera, et cetera. That's the kind of thing that can have really deleterious effects to relationships within the condominium and relationships within the market. And I think we heard Joe talk about it. That sometimes creates a response that says, oh, we're not going to get robbed by this guy. We're going to go out and use this other guy. And my cousin has an insurance agency and he's going to go place it. They pull the agent of record letter. They go to the cousin. The cousin can't even begin to place the policy because they don't have that kind of, leverage with a carrier who is already in a limited market. And now they're completely uninsured. And now they can't get the original quote back. And now they're in a really expensive layered policy, or they're going to Citizens. So my point is that I think education, they may not be able to change the market, but they can become a more educated consumer. And you can do that with your law firm. You can do that with your management company. You can do that independently. My point is that is part of a long-term solution to have people understand the market and the process better, so that misinformation is not what boards and residents are guided by.
And that goes to the issue of boards having transparency with the ownership and keeping them informed, and saying early on in the process, insurance rates are going up, labor rates are going up, the reserve requirements are what they are, and you ladies and gentlemen need to expect that maintenance is not going to stay the same. It's got to go up. It's going to cost more for condominium ownership. It used to be people moved into condominiums.
It was cheaper than
It was cheaper than living in a house. You didn't have to do the grass. You didn't have to have the pool. You didn't have to have your own pest control. You didn't have to fix your own roof. You went into a condo. You paid $1,000, $2,000, $3,000 a month, and you were covered.
Right.
And now that's not the case.
And I have a third takeaway with David's shirt. It is number 3, is that for someone who is new in the market, they are wanting to buy a condo. Is the general consumer educated enough to know to speak to a Josh, to speak to a David, to speak to a Joe? Do they know where to start? And if they don't, that's a problem. And that's one of the things I was trying to get across is, how does the regular person know how to start the process?
Right? I would say it starts with your real estate broker and your lawyer, because if you're a prospective purchaser, you want to know, does this condominium have a reputation of not being properly maintained? Do you know whether there are a lot of special assessments that have been passed? Are there upcoming assessments? I've said that since the change in the laws, you want to, and since the Surfside disaster, you want to know how much they have in reserves. Have they been waiving reserves prior to the new change in the law? Or do they have a good kitty of money from the past because they were conservative and didn't waive reserves? You want to ask, what are the financial statements of the association and how much money do they have in the bank and reserves? You want to ask about their insurance. Are they properly insured? You want to know if they have hurricane-proof windows. You want to know what kinds of lawsuits they've been in, if any. And you want to know what the current status of the building is through those engineering reports. You want to know, where does this building stand in terms of its parking deck, its pool deck, its expansion joints, its structural columns, balconies. How good is this building? Is it going to last? And is it going to need a lot of money in the short term to get it up to snuff?
And let's be honest, right? I think your average real estate broker probably doesn't know all of that offhand. They're probably going to know about half of what David said.
Which is my point.
I think there's probably a little bit of a similar orientation to real estate brokers as there are to insurance brokers. You're looking at reputation. You're looking at time and scope in the industry. There are certainly brokers who have a lot of familiarity with very particular associations or very particular neighborhoods, and that's commonly the case here in Miami. People who sell in Coral Gables are going to are going to know more about Coral Gables than they will about South Beach.
Well, there's also certain brokers that have sold tremendous numbers of units in a particular building.
Sure.
They have their ear to the ground. They know everything that's going on in that building. They either know someone on the board or they sold so many units in the building that they know everything about that building. You want to ask them those questions.
Right. And a little like Joe talked about on the insurance side, there's obviously a little bit of optical conflict of interest if you were to say, but this person's trying to sell me something, so aren't they going to be giving me information that's going to close the sale as opposed to that could have me walk away from it? And I think the answer to that is to say, brokers of reputation, right? We see Miami and the surrounding areas infiltrated with brokers of all ages, all experiences, et cetera, et cetera. Brokers of reputation who have been around for 20, 30, sometimes even 40 years, who have a track record of not only sales, but of relationships. And you can identify that. I think it's far easier to talk to a brokerage office or a broker individually and understand what their experience set looks like, time in the market. That's probably going to tell you a lot about their success relative to being an honest dealer and relative to building that kind of reputation that would afford them that success record, as opposed to, again, my brother has a real estate license and he's going to get the commission cut in half and I'm going to wind up buying a condo that is riddled with issues because we didn't ask the right questions and I didn't have somebody representing me in the sale that knew what was going on in the building, because it's the first time they've ever sold anything there.
And that's why you don't just look at the view anymore. You look at the building, you look at its financial condition, you look at its reputation, things like that.
Yeah, and I think the state, as through the passage of these laws, and the county and follow-up laws, are trying to create document transparency that way. It still raises the issue of who is looking for that. And so it is not just about the view anymore. The view has to almost now be split. It's a split screen. You got the view on one side and you've got the underlying financial and operational implications on the other. And I think if I were giving advice to somebody talking to a real estate broker, I'd saying any broker who does not raise the other side of that equation as part of the sale process is probably not a great broker, because they're only selling the view as opposed to selling the underlying business.
It's almost like having this shirt without having these shoes.
I am there for that.
So you have to have the combination, the split screen. You have to have the shoes that match the shirt. You have to have the view that matches the financials and the building's integrity.
Can we, before we close, can we at least give credit to the label on that shirt? Who is it? And so that we got to at least give them a nod.
I don't know.
I would wear it. I would wear all of this.
I can tell you that I'm not really doing this for Sun, Sand, and Soul. This is really for baby Haber, who is, as of yet, unnamed.
Well, hopefully by the next episode, we will have that name revealed in 3 days, and we're excited to roll it out. And who knows, maybe we'll throw a shout out to the yet to be named newest Haber in the family. Our congratulations again. It's a wonderful thing.
Thank you, and it's always great to be with you all. And I hope our large viewership enjoys our podcast, and hopefully we will continue to provide them with great guests like we had today.
Sounds good. We've got a very exciting episode coming up next on condo branding and branded condos. Very interesting issue. We've seen a lot in the news as well, so we're looking forward to that. In the meantime, this is Sun, Sand, and Soul. Please listen to us on Apple, on Spotify, on YouTube, on our website, www.sunsandandsoul.com, or follow us on Instagram. And we look forward to seeing everybody again. This is Josh Tomey. Have a great day.